You can't divorce the global trends in clean energy from global trends in the energy sector overall. So obviously, the most dramatic movements in the energy space in the last year or two have been the crash in price of oil and also reductions in gas. But the clean energy sector has been remarkably robust. So last year we saw record investment in clean energy, in renewable energy, energy efficiency, electric vehicles, record levels of investment in 2015, despite the crash in oil and gas prices. The Paris Agreement went far beyond the expectations of pretty much any of the commentators and analysts, to the point where I'm not sure that the broad business community understands how far-reaching it is. It really was a success. What it did was, it's not so much that it was binding, top-down, a carbon budget that we all have to then live under, and so on. What Paris did was it reversed it. It became all the countries committing to a decarbonization trajectory. And what was really extraordinary about Paris was the fact that there's a ratchet. So they've made commitments which are modest, but those commitments, there is a mechanism to tighten those commitments over time. So it's very meaningful. What we've seen in the carbon markets over the past few years has been essentially a failure to deliver the great vision of the carbon markets. The markets have been long. Partly in the first stages they were set up, there were too many credits were being given away free, and then just as the market started to function, you had the European crisis, and so the fiscal crisis, and so we've got these very low carbon prices. What we do at Bloomberg New Energy Finance is we analyze the fundamentals. We look at how many credits are going to be needed by industry and by the utilities. We look at how many credits are in the market, because these are set by, through legislation. And what we see is over time, the need for credits, if you like, the short in the market, growing from currently very low levels, we see that opening up. So that's a very technical explanation. What we see is, over time, the carbon price going up. And that's because European industry will grow, European electricity demand will at least be maintained, maybe grow somewhat, and the number of credits in the system is being reduced. So we see longer term, if you like, medium and longer term, we see the carbon prices going up, and going up quite significantly. If I look at it, you're still very heavily dependent on coal, more than pretty much any other country that I visit on my world trips. And you're at this extraordinary point now where the costs of clean energy have been coming down. The costs of wind, which is something that you could say, well, maybe solar is not the thing for Poland, but wind energy, the costs are coming down so that it is now cheaper on a unit cost than coal. Now, that doesn't mean you go 100% wind, of course not. But does it mean you can increase from these very modest percentages? Could you increase dramatically at a low cost, in other words, saving money for consumers? The answer is absolutely yes.
What we see at the moment is we're getting to the point where coal and gas-fired generation is actually coming down slightly in terms of its levelized cost of electricity, given that we've seen that fall in commodity prices in Europe and actually globally. But having said that, at the same time, onshore wind in particular is becoming increasingly competitive. And in Poland, we believe it's already cheaper than new coal and gas build. There is certainly some space in the Baltic Sea. The reference price that the government set for offshore wind could be potentially challenging in the next few years, but as the cost of offshore wind will come down, there is a potential that in the early 2020s, the costs will have come down enough for offshore wind to be competitive. So there is a potential for significant cost reductions, at least over the next 10 years or so. And so there's an industry target of around $110 per megawatt hour by 2020. At this point, it looks very challenging. So we had a time where the green certificate prices were so low that they don't actually incentivize new build-out of renewable energy capacity. Then now the government is trying to implement auction auctions and to again spur further investment in the field, but they've delayed that process for 6 months, and we don't really know when they actually start auctioning off new capacity. At the same time, they've cut down the certificates for co-firing, which actually makes up quite a big chunk of renewable energy generation in Poland. And now under these new conditions, it will be challenging for co-firing to be profitable, which will reduce the overall share of renewable energy in the production side of things. Now, towards 2020, the expected raise of, according to the EU regulation, of renewable electricity in Poland is actually quite steep. So in order to get to that target, they really need to get the policy uncertainty cleared out and provide basically a stable policy environment that allows investment in the field.